Hey guys, hope you are all having an amazing morning. Today, I want to dive a little deeper into Jerome Powell, Wall Street's favorite son, and what his approach to inflation, housing and cryptocurrencies might be if he were to remain chair at the Fed. Powell is a key factor in determining much of how the economy is going to play out, and knowing what his likely approach to different parts in different markets is pivotal to correctly assessing what is to come in the coming months and years if he were to win. It is without a question that this man is a puppet for Wall Street, and he is the single last bastion and protective guardian of the stock markets. With Biden tapping him to be nominated again, it's clear that Wall Street loves this guy and want more of what he has brought them, which is a zero-risk environment where they make up the rules and capitalize all profits while simultaneously socializing the costs and losses down to the middle and lower class. I want to thank Bloomberg Wealth, Claire Balantini, Miss Irlina Egkalfopoulou and Francesca Maglioni for their tremendous input into this man. I will be borrowing some of their thesis and inputs in this video, so shout out to the other big brains in this world trying to deep dive into this dangerous man. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. The man, the myth, the legend. Jerome Powell is the savior of Wall Street. The man came out swinging last year, passing policies that would ensure Wall Street would bounce back from the pandemic woes with no lasting damages. The hero for the rich has become a very controversial person, and for good reason. It is clear Wall Street and Biden want him as chair for 4 more years. His brash decisions to cut interest rates and some of its measures in order to support the economy earned Powell the loud applause of investors. His measures to have the economy avoid a prolonged recession was what made him famous in the first place. But all those things passed, and though we are still dealing with the outcomes and consequences to his policies and actions, there is nothing he can do but try to mitigate the damages of his actions. Looking forward, there are plenty of new challenges that are rising, challenges whose answer will have long-lasting ramifications for everyone, institutional investors as well as retail investors and even non-investors. Inflation has been the most discussed topic, with supply chain disruptions causing havoc and chaos all around, showing the Fed has no control over the situation at all. Measures have been attempted to scale back some of the worst aspects of inflation, and all have irrevocably failed. The Fed's main duties align with keeping prices stable, with guiding decisions that will place interest rates at normal levels and to help as many people get back to work as possible. Therefore, the central bank, or the Fed as you know it, plays a key part in the economy and in determining where we go. They affect almost every aspect of our daily lives, even if we don't really know it, from home prices to retirement savings to the prices you pay for food at your grocery store. The chair of the Fed is a powerful figure who dictates what is going to happen. Their responsibilities and role are deeply profound in determining all these factors we mentioned, so with Jerome Powell possibly remaining as chair at the Fed, let's examine some of the likeliest approaches to different sectors of the economy so that we are prepared for what is more likely to happen if he were to stay. Let's begin with crypto and other risky assets. During the past couple of years, high-risk investment have blown up in popularity. With people turning to investment apps in order to supplement lost income and lost career opportunities, cryptocurrencies and many unprofitable big tech companies have seen their values skyrocket to the moons of the galaxy. Economists estimate much of this as a combination of factors like the low interest rates that were pushed by the Fed mixed with stimulus checks and rising consumer savings. I would also like to add that people worldwide have taken a deep interest in understanding finance and the markets during the past 2 years, and by sharing this information across social media apps, a huge spike in interest for investment opportunities has risen. 5 years ago, you would never hear people bragging about holding on to assets like GameStop or Tesla or Bitcoin. Now, people have gained a lot of understanding on how markets work, and people take pride in saying they are holding positions for stocks that Wall Street deems risky, often touting these investors as gamblers who don't know what is best for them, calling them dumb money. Yet by contrast, dumb money as they call it, has yielded insane returns on their investments. Bitcoin has almost doubled since the beginning of this year. Doge and Shiba Inu both have a theoretical market capitalization of more than $24 billion each. Tesla has been an absolute home run to anyone who bought in. In fact, the amount of self-made millionaires that have been made by this stock has been unprecedented. Seems like dumb money is where the most money is, so the craze and incentive to learn continues to grow. Bringing the topic back to Powell, If the man is slow to continue raising interest rates, investors are very likely to continue trading as they have been, which is risky by economist and analyst estimates. There is good evidence that suggests cryptocurrency is a good hedge against inflation. Because each respective digital coin is limited in supply, it can't be devalued, unlike the dollar, which, as you might know, continues to be unashamedly printed every time there is a problem. Economists are propounding that for big crypto enthusiasts and investors, another term for Jerome Powell will continue to enforce confirmation bias that crypto is a good hedge against the dollar and further loose Fed policy. Right now, the biggest concern for officials and big investors is how markets are going to fare and react without additional support from the Fed. As president of wealth management firm Bonafide Wealth said, when you take one of these crutches away to see if the economy can walk on its own, investors are going to find out just how durable their portfolios are. I think there is some truth to this, though I don't think the hype and enthusiasm for crypto will die. I do think crypto is in a huge bubble that when it bursts, will leave a ton of people at huge losses. For now, another term for Powell would mean things will not be shaken up. Moving on to real estate and housing, low interest rates during Powell's tenure have helped encourage many people to take out mortgages and buy homes. However, the policy here wasn't really aimed at helping the little guys achieve affordable housing. Statistics show that though many people took out mortgages, the majority of these people were already wealthy and owned multiple properties. The lower class and middle class who owned property saw their value increase, but everything in the market is inflated, so it really didn't make that much of a difference. A significant portion of low and middle class will never achieve ownership, and the rate of this is growing year by year. Regardless, there is certain expectation that lower for longer interest rates are to continue if Powell remains as chair. This is something that is quite bullish for the real estate overall, which, as we know, no longer really belongs to the people as it is increasingly belonging more and more to Wall Street. They want to keep a healthy bullish market here so that they can make mad profits before the bubble bursts. Keep in mind the housing market is ridiculously overinflated, as big institutions have been parking a lot of their free-sitting cash here as a hedge against inflation, which is eating the dollar like I eat Hot Pockets. There is also reasonable evidence to believe that rates for credit cards, home equity lines of credit and other consumer and small business loans will move higher. As such, many analysts are recommending homeowners to refinance their mortgages now while rates remain low. All in all, another Powell term is reassuring for homeowners and real estate in the sense that they will continue to enjoy their home prices grow and continue to transact people out of the market to build the next generation of renters. A fat L for us but a huge win for them, so Powell is looking like the best choice for those interested in continuing the way things have been in the real estate sector. Inflation is up next. Listen, I think that if the economy improves overall, rates will move up regardless of who the Fed chair is. The problem is that the pillars that hold the economy up keep being replaced with paper, and paper crumbles easily under pressure. The gig economy, people not wanting to work for meager wages, student and medical debt, cost of living and impossible positive outlook is going to have a devastating effect on the bounce back, and as far as I can see, we are not improving on any of these. Experts tout a huge economic comeback without really accentuating where exactly we will see such thing or how it will happen. Some worry that Powell has underestimated the threat of inflation, me included, and has over-attributed it to some current supply chain issue, instead of recognizing it for what it truly is, which is a lasting force. Everyone is equally divided on inflation, as the Fed results don't allow for even the blind to remain optimistic about it. I think people know Powell did a terrible job with the response to inflation and nobody is happy with it. All in all, this is single-handedly the most divisive issue for experts and analysts, though I am firm in my position on it since it's as clear as day. Lastly, we finally arrive at retirement plans. Since a lot of retirement plans sit on the 401 kelvins, much of the discussion for and against Powell sits on his direction for policies, and the uncertainty of new and unexpected policies introduced by his successor if he were to be kicked out of the Fed. As of right now, since Powell did an amazing job with the stock market, the generalized opinion of everyday investors is that they see Powell as more continuation of what he has delivered, which is a green market. Investors are risk-averse, so they will prop this man up even if it means that crash that will happen will be worse for it. They cannot imagine themselves comprehending what it is to further inflate the market, but will do so because otherwise they see it as betting against themselves. Status quo usually leads for an easier conversation with clients, so firms want Powell to remain with his unlimited printing policies that will insulate Wall Street and the stock market from normal conditions that would otherwise bring it all down. As you can see, on all four categories discussed, Powell is mostly favored by analysts and economists who want everything to continue as it has been, even if the markets are overinflated. They will rather keep blowing air to the balloon even if they know it will be unsustainable at one point and burst, but that is human nature as it has always been, and has actually been the reason for big market crashes throughout most of history. More Powell means more continuation with indifference to the effects that it will have, something that can be observed by looking at inflation. I hope to have inspired some wrinkled with this little DD, so let me know what you think and if I helped you get a little better understanding of what another tenure from Powell means. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Hope you keep having a great day and I hope to see you later today on the recap video. Until then, keep on buying the dip and to the moon.